Hi, Bitcoin is pretty close to its all-time high, currently at almost $62,000. The all-time high was here on the 14th of April at a bit under 65,000. And the question is, does it make sense to sell right now? Because it seems like what's going up has to come down at some point. Now in this video, we're going to look at different indicators, at the logarithmic regression, at the pi cycle top indicator, at the market value to realized value score, and last but not least, at the stock to flow model. Now this is the very long-term chart of Bitcoin, starting all the way in 2010, the middle of 2010, where Bitcoin was just a few cents. It's on a logarithmic scale, so the higher we go on that scale, the larger the differences between one of those horizontal lines. And we can see that Bitcoin moves in cycles. It can go up by 100x in one cycle and then afterwards go heavily down again by more than 80% when there is a crypto winter. Now it's impossible to predict when a crypto winter might come. But what we can do is add different data and try to get a feeling of how that data reacted during those prior cycles. So one very interesting thing to look at is the logarithmic regression. This is again the Bitcoin chart on a logarithmic scale, and we see a line that goes through those prices. This line is calculated by minimizing the sum of the squared differences between that line. So you try to get the perfect fit, the perfect logarithmic fit to the price history. And then what you also got over here is an upper bound and a lower bound to that regression to kind of get an idea where in general the price might find a floor or where it might peak. And so if we zoom in here and we look at, for example, the price range until the end of the year, we see that the upper bound is at around 150K, the lower bound is at around 26K. And obviously nobody knows if the price will stay in that range, but historically speaking, this was a pretty good approximation. So if you're worried now, are we overheated according to this indicator? It doesn't look like this at all, right? We're pretty close to the fair value. And so the potential risk versus potential reward looks pretty nice. This is a logarithmic graph, so even if we are in the middle of this trend channel, we might go down by 60% or so, but we might go up by a 3x almost. So this looks like things are balanced, but actually when we are in the middle, the expected value here is positive. Now another interesting way to look at this is when we did have a rally before and then we corrected, how did the price afterwards behave? Because that's exactly what happened here, right? After the middle of April, we went down in Bitcoin by more than 50%. Now we are getting close to this all-time high again. Half a year has passed. And if you look at similar price behavior in the past, for example, here in 2009, here we went down by 60%. Then we got close again to this regional high. This took a little bit over a year. We then went off to the races by a 4x. So these kind of patterns, they tend to repeat themselves. It never really happened that we dipped for a while, came back close to the all-time high, and then went down again. Usually what happens is that a new all-time high triggers a lot of media attention, and so new money comes in again. This new money might now simply come in through the new ETF that's just been approved. So a lot of media attention, new on-ramps to the system, and so what typically happens is that the momentum continues. But obviously nobody knows the future for sure, but that's simply what happened in the past. Now here's another interesting indicator, the pi cycle top indicator. This is simply retrofitted data. So somebody found out that when you take 2 times the 350-day moving average and 1 time the 111-day moving average, and you look at when do those moving averages cross, during those times, you very often found a market cycle top. So this happened repeatedly in the price of Bitcoin. These crosses happened very close to the market cycle tops. And so in recent history, this was actually a predicted market cycle top. This was not retrofitted. We again got our correction of 50%. But if you look at it right now, these two moving averages, they are very, very far apart from each other. So this indicator at least also does not suggest that we are anywhere close to the top. The pi cycle top indicator very much indicates that we've still got a lot of room to grow from here. Now everything we looked at so far was only price data. But the nice thing about crypto is that all transactions, they are public, right? You don't necessarily know who owns what wallet, but you do know what kind of Bitcoin moved from one wallet to another at what point in time. So you've got a public ledger, a public blockchain, and so you can see the velocity. You can publicly see what are people doing that say bought Bitcoin 1 year ago or 2 years ago. Are they selling now or are they holding on? And in order to measure this, we've got the market value to realized value Z Score. So what this does is it looks at the market cap of Bitcoin, so the number of issued Bitcoin times the current price, and it subtracts from it something called the realized value. And the realized value is looking at when did a Bitcoin move the last time. So say when somebody bought all the Bitcoin here at the beginning of 2019 and never sold any, then the realized value would simply be the number of Bitcoin issued at that time times 4,000. So you would have a high value here. We would subtract only a very low value over here. And then we divide this by the standard deviation simply to adjust for market risk, for volatility in general. But a high value here, a low value here, this means the Z-score would be pretty low if everybody bought here and nobody is selling right now. If, however, the people that bought here are recently selling, then a lot of the Bitcoin in this Z-score, a lot of the realized value is then registered at a much higher price. And so once you see people that exit the market, that bought cheaply and that sell recently, when you see a lot of this movement happening, then the Z-score will go up. And so when you simply look at this historically speaking, we can see in blue is the historical Bitcoin chart again, that the Z-score tends to be pretty high when we see those market cycle tops. So that's basically when the smart money is moving, right? That's when the smart money is selling. That's where the Z-score is high. And so it's a pretty good indicator for spotting how heated is the market currently. And if you just look at this, right, we are very, very low on this indicator now. So again, another sign that we are nowhere near the top. The smart people that bought cheaply, they are not yet selling. They still hold on to their Bitcoin. We might be equally high in price compared to April, but we are way lower on the Z-score. So the market looks now way less heated than it was when it was at the same time here in the middle of April. It might look scary for the people that just enter the space, right? More than 100% in just 3 months, but that's how volatile crypto is. Crypto can go up, but can also go down quite rapidly. And so the best way to protect against this is obviously trying to time the market somewhat, but also to diversify. The best diversifier is obviously a different asset class. Stocks are pretty lowly correlated to Bitcoin. So don't just own crypto, own stocks and property as well. So it doesn't hurt you psychologically that much if crypto goes down by say 60-70%. It can easily happen. But another way if you want to stay within crypto is to simply not just buy Bitcoin, but to buy, for example, Ethereum as well. But when you look at those charts, right, this is now the Bitcoin chart, this is the Ethereum chart, you can see they look relatively similar, right? So there is a high correlation between the two, but it's not 100% correlation. Look at Bitcoin here, we were pretty high for quite a long time, pretty much a sideways movement at the beginning of the year. Ethereum went up during this time. So it does make sense to own both. Both go up over the long term. In fact, Bitcoin is underperforming Ethereum over the very long term. So if you bought Ethereum when it came out versus Bitcoin, you would have now 20 times more money. So Bitcoin underperformed Ethereum by 95% during those 6 years. Now, one thing that's also worth noting is there seems to be some kind of predictable pattern within crypto. September in the last years has always been the weakest month for Bitcoin. Q4, however, has always been pretty positive, or most of the time. And so this seems to be repeating itself. September this year was pretty bad, and October seems to be very bullish again. So if history is any indication, we might rise until February. That's, at least historically speaking, pretty bullish. I wouldn't be surprised if we see history repeating itself again. This might simply be a self-fulfilling prophecy at this point. A lot of people know this. A lot of people try to time the market in this way. And so when everybody expects the prices to rise, then what happens is that nobody is selling, that everybody is holding onto their Bitcoin. Less supply with equal demand means rising prices. Now, what also looks pretty healthy is Bitcoin dominance. Bitcoin dominance is rising with this recent rally. And I see this as a sign of the market not overheating too much. Because what happens is when the risky altcoins, the very small crypto projects, when they gain a lot of momentum, when a lot of money pours into those projects, that's kind of like an indication of people willing to take a lot of risk. And so when Bitcoin dominance is very low, as happened here at the beginning of 2018, that's also the point where the price is very high, but where we then potentially heated and where we can go down by more than 80%. If the recent rally is driven by Bitcoin and not so much by Ethereum dominance is pretty flat. Same goes for the altcoins. The others' dominance, also very flat. If the thing that's rising is the most conservative of the cryptocurrencies, that tells me that this whole rally here is new money coming into the space. It's not existing investors going higher on leverage or higher on risk. Because if they want to get more risk, they could simply buy altcoins. But because the altcoins are not increasing, but the conservative crypto is increasing, I see this as new money coming in. Usually what happens is the first thing that people buy is crypto. And then once you get used to the idea and you feel comfortable with investing into crypto, then you start looking at other projects. Then you might buy Ethereum. And afterwards, then you might buy altcoins. And look at things like Cardano or Solana or Avalanche or Phantom even. But people rarely start with buying Avalanche. People start with Bitcoin. And so that's, I think, what we are seeing here. A lot of people that dismissed this huge rally here, a lot of those people are now finally waking up and getting into crypto. And the main reason is probably the sound money principle. The issuance of fiat currency from the central banks due to the coronavirus. It is pretty scary. Money gets devalued. It's harder to buy a house. It's harder to buy assets in general. Stock prices get artificially pushed up. Debt gets devalued. So having a mortgage makes a lot of sense. And so the hardest of the monies that's got a supply cap, Bitcoin, it is getting adoption. It's the only money that's completely censorship free. If you own Bitcoin on your hardware wallet, nobody can take it away from you. And so one model that tries to estimate how high can Bitcoin go, historically speaking, is the stock to flow model. It's basically looking at the new supply issuance of Bitcoin, which gets cut in half every 4 years. So there's less and less new supply of Bitcoin over time. And so with this increased rarity, the price is supposed to go up. And so you have this step function, and that estimation has simply been derived by looking at precious metals. If you look at the new issuance of, say, silver or of, say, gold, you can look at this new issuance and put this into relation to the overall market cap of that asset. And since the new issuance of Bitcoin gets lower over time, the corresponding market cap should increase. And so the prediction of the stock to flow model is that we will hover around 100K until the middle of 2014, and then we might go off to the races to 1 million by the end of 2025. Now, obviously, this is just a model, so you do see quite a bit of deviation from this model price. And at some point, the model also has to break, right? Because when we get a 10x every 4 years until infinity, or at least for the next 100 years when all Bitcoin have been mined, this would imply a Bitcoin price that's way out of reach, at least if we don't get hyperinflation. And so if you don't assume that there will be hyperinflation, this model will break. But so far, it's done a pretty good job, and I wouldn't be surprised at all if we can reach the 100K pretty soon. Now, this is the Bitcoin price divided by the Ethereum price. And so we could argue that there's some kind of trading range now. Sometimes Bitcoin is expensive, sometimes Ethereum is expensive. Currently, Bitcoin still looks pretty cheap. So the question here really is, will Ethereum outperform Bitcoin over the very long term, or will it be trading sideways for a while? It's really hard to answer this question. You need to do your own fundamental research here. My approach to this is simply to own both and to benefit from the diversification effect, to get overall lower portfolio volatility by being exposed to both assets than simply to only own one of them. I think timing the market here is pretty tough, but timing the overall crypto market doesn't seem too hard, at least roughly, right? It's probably a bad idea to go all in when the market to realized value is very, very high. It's probably also a bad idea to sell everything if we are very low here. So you need to go somewhat against the masses. You have to buy when nobody is talking about crypto, and you have to sell when everybody is super excited. And so far, luckily, we are not yet super excited. We are close to the all-time high, but the risky assets, they are not yet picking up. The media is not yet picking it up. So I am also not yet selling. I hold on, and I will definitely not sell anything before 100K. Probably I will even wait further until 125K or so. At that point in time, risk versus reward looks a bit different to me, but until then, I'm more than comfortable with the current volatility. If you enjoyed this video, please give this a like. YouTube will then help to grow the channel. And if you haven't yet, feel free to subscribe. I publish videos regularly. Last but not least, we've got a channel on Telegram, the Bitcoin Strategy channel. You can find us by searching for Bitcoin Strategy channel within the Telegram app or by clicking the link in the video description. See you next time. Bye-bye.